Good morning. Today is Monday, August 9th. It's about 8:30. The markets just opened up. They are mixed here today. Just want to thank you for joining me here today. And I want to start us off with a save the date for you. I'm excited to invite you to our next quarterly client appreciation event. For those of you that were on our wine tasting event with Tony, the wine guy, Tony is back coming up here in September. And during this virtual session, Tony will lead us through a tour of tequila to learn more about this fantastic spirit. Together, we're going to learn the art of making fresh margaritas, as well as a non-alcoholic version, Noritas, for the kids. And no margarita party would be complete without delicious homemade guacamole as well. So we're going to have a list of items that you can download from our website up on the site very, very soon. And for those of you who do want to join live, you are invited to come to the office, and we will be doing it here in Eden Prairie live as well, watching Tony on the big screen. So mark your calendars. Join us Tuesday, September 14th. We'll get started about 6 o'clock. It'll be an entertaining evening featuring a few staples of the Southwest. So we also want to encourage you and invite you to invite your friends and family who might enjoy this party as well. So with that, I'm going to dive into this week's recap, and that is that despite Delta variant fears, stocks rose last week on strong jobs and strong earnings reports. So I'm going to go ahead and roll the intro, and then we will get started here. Life is too short to worry about what the next headline could do to your life savings. Hi, my name is Eric Hagan, and I keep my thumb on the pulse of the economy and the markets so my clients can focus on the things that are actually important to them. Thank you for joining me the next few minutes on today's weekly economic video update. All right, overcoming jitters about the Delta variant and the reintroduction of mask requirements, stocks climbed higher on strong employment data last week and a fresh batch of strong corporate earnings. The Dow Jones Industrials Average rose 0.78%, while the Standard & Poor's 500 advanced 0.94%. The NASDAQ Composite Index gained 1.11% for the week. And the MSCI EAFE index, which tracks developed overseas stock markets, picked up 1.61%. The cross currents of strong corporate profits and the rise in Delta variant infections led to a roller coaster week of price action as markets alternated between daily gains and losses. By Thursday, however, investors appeared to grow more optimistic. The economic reopening was not under serious threat when back-to-back employment reports suggested that the economic recovery remained on track. A favorable initial jobless claims report was enough to send the S&P 500 and the NASDAQ to new all-time highs. And thanks to Friday's stronger than expected employment report, the S&P 500 managed to add to its previous record close, while the Dow Jones Industrials Average set its own record high. The more tech-centric NASDAQ, however, slipped off of its highs. Last week reinforced the idea of an improving labor market after a disappointing ADP national employment report that showed a slowdown in private sector hiring with just 330,000 new jobs added. Subsequent employment data was much more encouraging. Thursday's report of a modest drop in initial jobless claims to 385,000 and a more substantial drop of 366,000 in continuing claims was followed by a solid employment report on Friday, which showed employers had added 943,000 new jobs during the month of July, the biggest jump since August of 2020. This hiring increase shaved the unemployment rate to 5.4%, down from June's 5.9% rate. And then final thought here for you today. Goldman Sachs economists recently downgraded their global growth estimates primarily because of the fast-spreading COVID Delta variant and its potential impact on slowing the world's economy's recovery. Several months ago, we listed potential headwinds to U.S. equity markets and listed the fast spreading of the Delta variant as a risk. Well, it's happening. However, we do think equity markets will continue to grind higher over the remaining part of the year. We estimated the S&P 500 index would reach 4,400 by the end of July. This target was just about met, closing out July at 4,395. Our longer-term outlook is that the S&P 500 will reach 4,700 by the end of the year. We still believe this will happen, but not without some pullbacks in stocks and some bumps in the road. So expect volatility to creep up as the impact of the Delta variant unfolds, and look for pullbacks to be buying opportunities. Another pause in the U.S. economy could be a good thing. Why? Well, the economic cycle could be extended another year, and the Fed will be forced to maintain a dovish monetary position longer than expected. The average economic cycle runs approximately 5 years, and a minor slowdown could extend this business cycle. During business cycles, equity markets do experience several corrections, and a correction is a drop of 10% or more from a high. I just want to remind you that this would be normal. All right, remember later on today, I will be sending out our full economic update for the week. If you'd like to get this and you're not getting it, be sure to go to our website and subscribe. In this update is also a financial tip of the week, companies who are reporting earnings that we're watching, financial data that we're watching, plus a little bit of fun with a quote and a riddle for you as well. Hey, this is Eric again. That's it for today. Don't forget to subscribe before you leave. Here at Capital Consulting Group, we provide personal wealth planning and fiduciary investment management solutions for individuals, couples, and families. To learn how to see your entire financial situation, both today as well as every year into the future, go to clearfinancialfuture.com and watch the short 2-minute video. To learn how we give our clients' life savings the attention it deserves and to see how we're doing, visit smartmixportfolios.com. And lastly, if you'd like help investing your 401k at work, visit me over at 401kinvestmentpros.com. Thank you again for your time today. I'll look for you next week.